Futures point to a higher open on Wall Street following yesterday's largest decline of 2012. Economic data include the ADP employment report, non-farm productivity, and consumer credit. In corporate news, Apple is hosting its iPad event. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Scott, we're coming off our largest drop from 2012. Before we look at our trading plan today, let's review key levels from yesterday.
Yeah, well, on Monday we closed below the 10-day moving average. We saw some weakening signs. So for a lot of technicians out there, yesterday was no big surprise, and we were somewhat ready for it. So if you look at the chart of the S&P, you will see, we've been riding this 10-day moving average the whole entire way, all the way since December 20th. Okay, so on Monday, you saw a bit of a break, a close below the 10-day, and then pow. We are now out of this accelerated trend line, and now the question is, where do we stop? What type of correction do we have in front of us?
Right, so we have a big day on tap today. We have the iPad event in California, so you can see a lot of headlines coming out of that. Greece is still a mess. People are still talking about that China number, but Friday is a big jobs report, and we have ADP employment today. So what's our trading plan going into trade this afternoon?
Well, yesterday I covered my shorts because I said, you know what, nice trade, about 30 handles off the high. The question is now, what can I get long? Do I go for a cute trade or do I go for a swing long? So I did get a little long yesterday on the close. What I'm going to do is I'm going to measure the bounce. I want to see what type of bounce do we get over the next day or so. Is it potent or is it feeble? So then I could realize how we're going to go moving forward. So if you take one more look at the chart of the S&P, you will see I think the bears need to defend this broken trend line. If we can't get back above just say 1357 to 1358 over the course of the next few sessions, you might see this support break, and then we get a much bigger support down at the 50-day moving average, which is 1321. So we have a new point of reference. I think the bulls might try and take this bat, but the bears really have to defend that level if they want further selling.
The theme for the overall call this morning is leading sectors and names are lagging. We're going to look at large cap tech in the sector spotlight. Scott, let's review Microsoft and Intel.
Okay, well, Microsoft was my surprise mega cap stock of the year. Friday on the Twitter sphere, I said sell it. It's come a long way. If you look at the chart of Microsoft, you will see that this stock, ever since breaking this downtrend, has had a monster move. It also closed below the 10-day. I guess aggressive buyers would be looking to buy somewhere around this 31 level, but I would say only go with a tier 1 because you do have a far way down to this 2940, which is the 50-day. So I think watch Microsoft. It's been a decent barometer. If it closes below this trend line, you're going to see further downside, and that can give us some clues that the market might have more to go to the downside as well.
And quickly, Intel, what that broker upgrade this morning?
Yeah, Intel actually went to the 50-day already and held it. So if you're a big Intel fan and you wanted to buy it, this is a spot. It's been going sideways for a long period of time after a nice breakout. So I guess you want to be long versus 26, that's okay. But if this also breaks below 26, you have further downside, and that's also another clue to look at on whether or not the correction continues or yesterday was it.
When we jump into the trenches, we're going to look at the financials and some cyclical names. Again, these were leading sectors that are now lagging. We're going to look at Bank of America for the Morning Call Express and GE.
Well, if you look at Bank of America real quick, Bank of America on the chart is at support. So just like some others, it's at support. The question, does it hold this upper level support? So 771 is the level. If it breaks below that, you have 723. I do think that 723 would be a compelling level to buy, but obviously it's got to break this support first. So look at that as a barometer with GE.
Yeah, same thing with GE as well. It's that 50 DMA.
Yeah,
right.
Let's look at the chart. GE, real quickly, it also broke below this upper level, okay, and now it's trying to hold another level. So right down 1823, but I do think 1750 could happen. So really, I think the mantra here is what level holds. So write down support 1, support 2, support 3, just in case yesterday's low is not the low of what could be a correction as we move forward.
In the long haul version, we're going to look at some quick hits for some quick cash. But Scott, before we wrap up, I want to take a look at Apple. Barclays taking up their price target to $710. That's the highest on the street.
Yeah, well, Apple yesterday let us up a little bit off the lows. I actually got long again. The 10-day moving average has been an area of support. I figured there might be excitement into the open. If you look here at the chart of Apple, you will see, this was the last time it reversed and it held the 10-day. Nice big move, broke below this upper area. Some guys got short, but yesterday it showed some strength, and now you have a new point of reference. I bought yesterday. I'll probably sell a little bit before the news, but here you go. It held the 20-day. I would say trade it long versus 20-day, but sometimes they do try and sell the event, so watch the composure right afterwards.
Okay, we got a real busy day today. Don't forget, every day Scott and the team wraps up the charts on Options Profits, Real Money, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.